Well, we think the numbers are quite good, and also if you're looking at the GDP number as well and the recent manufacturing numbers, they're all reasonably strong as well. And in fact, if you're looking at the 7.3% GDP, you compare that with some of the other major economies, for example, the Q1 GDP number in the United States, well, that clearly isn't too bad, and yet what you see generally from investors is that they're still a lot more hesitant about China than about any other markets, even though the numbers are actually pretty good. One thing there, and one big worry for many investors in the Chinese market, is the potential property slowdown or potential property bubble. But a very, very important thing to bear in mind for investors that we want to emphasize here is that the property market is not the same as the equity market. The equity market has seen already a major slump. Over the last 5 odd years, we have seen a drop in the Shanghai index of about 65%, and equities are now very cheap. On a forward price to earnings ratio basis, we see about 7.5, and that's cheaper than any other major market, even cheaper than most of the emerging market, perhaps with the exception of Russia. So while we are also somewhat concerned about the property prices, the equity markets are very, very reasonably priced, and that even includes the banking sector and then some of the listed property companies as well. Some of the Hong Kong listed real estate investment trusts even trade at over 50% discount to the book value of the assets they own, and we think these are great opportunities. Well, in our view, the government still has got a lot of room if they want to stimulate the economy. For example, the reserve requirement ratios of Chinese banks are still above 20%. That's far, far higher than any of the Western markets, also higher than almost all of the other emerging markets. So if there's a tight situation of capital, if there's a further weakening of the property market, I think the Chinese government is in a position to be able to address that if and when they want to. Also, the government tax revenues have been very strong, so we are not all too concerned that there is going to be a major problem from resulting from those issues or challenges, because again the government has a lot of financial ammunition to address those problems if needed. If and when they are going to use them, recently they have been quite cautious. They have put some stimulus measures in, for example some tax decreases, and also they have supported the infrastructure sector to some extent, but they still don't want to roll out major stimulus measures if it's not needed. In any case, again, looking at it from an investor's perspective, we think the market is attractive whether or not we see further major stimulus measures coming out in the near term or not. Well, firstly, obviously, property prices are concerned. They are quite high, clearly, but from an equity investor's perspective, that is not necessarily a bad thing. In fact, we could see some money flowing back from property into equities, because right now equities appear extremely undervalued compared with physical property prices. Another major challenge for China is the pollution problem, as everybody knows. And one of the major reasons for this problem has been the burning of coal in large quantity, as China is very, very dependent on coal use for its energy supply. But more and more they're trying to switch this to natural gas use, which is much cleaner burning. And that's in a way also a potential investment opportunity in our view for Russia, because Russia has got the world's largest natural gas reserves. You know that recently a major supply deal was signed, and there could be further deals coming up. So we think looking beyond China now here, an investment opportunity arising from China's problem, but outside of China would definitely be in Russia. Despite all these geopolitical worries, we think, taking into account the very, very low valuations of the Russian equity market and the rising export potential, in fact, not just to China, but also to Japan, to South Korea and other Asian markets, it's definitely worth holding a position for investors who can tolerate a degree of risk.